Well, we had that jobs report last week, and what once again became very clear, and we've been talking about this now for several months, in fact several quarters, is that we do think that the bond market is ultimately going to be in charge of what the equity market does this year. So what you've got here on the chart is two lines. You've got a chart in, or a line I should say, in blue, which is the S&P 500, and then the one at the bottom is the red line, and that is bond prices as represented by the TLT ETF, which is sort of the 20 plus year part of the yield curve in bond price terms, not in yield terms, the inverse price. So price goes down is basically meaning that yield goes up. And of course, 10-year bond yields have been going up, and that has been putting a little bit of pressure, although would argue that we may see more pressure at some point on the equity market, that blue line. In fact, you can see the correlation there over the course of time is there. It's not a day-to-day inverse positive correlation, but we do think that there is some reason here to be a bit concerned about that move in bond yields. And basically what you can see is what we call is the hungry alligator chart, a big opening here, just like we had at some point back in 2020 as well, which in that case it was the inverse. The bond market was actually trading, if you will, above the equity market. So essentially bond yields, bond prices ended up coming down, bond yields went up, and essentially the equity market followed to the upside. Now it's a situation where the bond market has been seeing a lot of pressure to the downside, and we do think that is likely going to be a situation where the equity market, the blue line, might start to at some point reconnect, at least to some extent, with that red line down there. So that's something to keep in mind. It's very big picture as far as this year is concerned, but it's something that I think everyone should be aware of, that we have this disconnect between the equity market, which hasn't really cared about bond yields going higher. We will see what the levels are. Maybe 10-year has to go to 5%. We shall see. Keep this in mind. See you in the next video.